Hey, Daniel. I was driving by the post office yesterday and that line was already starting to wrap around the building. I even saw a couple of people sitting down with folding chairs.
Oh, yes. The April 14th special. It's that universal feeling of collective blood pressure rising across the country. It's the one day a year where the post office feels like a stadium entrance.
Oh, yes, it does. And it really doesn't matter if you've done for months or if you're currently staring at a mountain of receipts or your dining room table, that tax deadline just has a way of making everyone a little jumpy. It's like a final exam that the whole country takes at the same time.
It really is. And for a lot of people, that jumpiness comes from a place of uncertainty. We hear in our branches all week, did I do it right? Do I owe? What if the check doesn't clear in time?
Well, today, we're going to try to lower your blood pressure just a little bit. We're going to talk about what to do if you're in a current state of panic, and more importantly, how to set yourself up today so that in the next year, you're not the one in that folding chair in the post office line.
Welcome back to Making Sense of Your Sense. I'm Daniel Hill.
And hey, friends, I'm Shanna Browning, and welcome to our Season 2 premiere. Woo! We are so excited to be back with you, helping you navigate your financial life with a lot more confidence and a lot less jargon.
Absolutely. Well, Shanna, today is April the 14th.
April 14th.
Tomorrow is the big deadline. And while we aren't CPAs or tax preparers, let me say that out front, we are bankers who see the aftermath of tax season every single year. And today, we're going to help you find some last-minute sanity. Let's start with the most common question we get. What if I'm just not ready?
Well, let's talk to that person who's listening to us right now and saying maybe in their car on the way to work and they're realizing they are simply not going to finish their paperwork by tomorrow. So what is the very first thing they should know?
Well, the most important thing to understand is the difference between an extension to file and an extension to pay. This is the number one mistake that people make.
So let's tackle that a little bit. That's a huge distinction. I think people hear the word extension and they think grace period.
Exactly. You can go to the IRS website right now and file Form 4868. It gives you an automatic 6-month extension to file your paperwork. It's easy and it stops the failure to file penalty, which can be pretty steep. But, and this is a very big but, an extension to file is not an extension to pay.
So, the IRS still wants their money by tomorrow, even if you haven't finished the forms yet?
Precisely. If you think you're going to owe money, you need to estimate that amount and send a payment by tomorrow to avoid interest and late payment penalties.
Okay, so that's great. But what if someone literally doesn't have the cash to pay what they owe right now? Should they still file the extension?
Yes. Even if you can't pay a dime, file the paperwork. The IRS is much easier to deal with when you've been transparent. They have payment plans and options, but those only become available if you've actually filed. Don't go radio silent on the government. That's when the expensive penalties start stacking up.
Of course. So now let's talk about the other side of the coin. The refund, the big refund. We see people get so excited when they see a $3,000 or a $5,000 refund coming their way. They start planning vacations or buying new furniture with it.
Well, Shanna, I hate to be the bearer of bad news, but
I'm trying to buy something here, Daniel.
a massive tax refund is actually a sign of a missed opportunity. It's essentially a participation trophy for overpaying your own money.
Okay, you're going to have to explain that because most people think a check from the government is a huge win.
Think of it this way. A refund is just the government returning your own money to you because you overpaid throughout the year. You essentially gave the IRS an interest-free loan for 12 months.
And while they had your money, my money, we couldn't use it.
Exactly. Let's do some quick math. If you got a refund, let's say $3,600, that's a $300 a month that was missing from your paycheck. If you had that $300 a month in a high yield savings account at, let's say, 4% interest, you'd have earned over $80 in interest for yourself.
Or if you used that $300 to pay down a credit card with a, for instance, 20% interest rate, you'd have saved hundreds of dollars on that one.
Thousands better.
I like thousands better too. Saved hundreds of dollars in interest charges over the course of the year.
Now, I do want to add one important footnote because we're talking about overpaying. But for a lot of our listeners with families, that refund check might actually be coming from things like the child tax credit or other family-related credits.
Okay, that's a great point, Daniel. So I guess in those cases, it's not necessarily that you gave the government an interest-free loan. It's the government is providing a benefit you're entitled to because of your dependence.
Right. Those are often refundable credits, which means it's essentially new money coming to you. If your refund is purely from credits, you aren't necessarily losing out on monthly cash flow. However, you still want to check your W-4 to make sure you aren't also over withholding on top of those credits.
So the goal is to have the most accurate paycheck possible so you can support your family in real time. Whether it's through credits or withholding, we want that money working for you as soon as possible.
Precisely. And while a big check feels like a windfall in April, it's much better to have that money in your paycheck every month so you can put it to work for your goals. Our goal should be to get as close to zero as possible, meaning you didn't owe a ton, but you didn't give Uncle Sam a free loan either.
That's right. That's exactly right. And that perspective shift is the key to going from being reactive to being proactive with your finances.
Hey everyone, it's Daniel Hill from First Century Bank. If you've enjoyed listening to Making Sense of Your Sense, and you found our tips helpful for your financial journey, I want to ask you a quick favor. Please take a moment right now to hit that subscribe or follow button on your favorite podcast app. It's the best way to make sure you never miss an episode, and it helps other people in our community find the show. We also really want to hear from you. Do you have a question we haven't answered yet, or just want to let us know what you think of the podcast? If you're listening on Spotify, you can leave us a comment directly on the episode page, or you can always send us an email at podcast@fcbtn.com. We're building this show for you, and your feedback helps us make it even better. Thanks so much for listening and for being part of this journey with us. When we talk about shifting that perspective, we have to look at the real world questions that we hear at our branches every day.
And these are the questions that come up across the desk every day this time of year. For example, Daniel, a big one we hear is, how should someone manage taxes when balancing a full-time job with extra income from a side project or even a hobby?
That is so relevant right now. I think almost everyone has some kind of plus one income stream.
Absolutely.
The biggest mistake people make is thinking that because they have a regular job where taxes are taken out, the side income is free and clear. But that side income is usually untaxed. I recommend setting aside roughly 25 to 30% of every side hustle dollar into a separate savings account the moment you get it. Don't wait until April to find out you owe $2,000 you didn't have.
Yeah, that's a great thought. And then another question that our neighbors often ask is, what are some common tax filing mistakes that can really hurt your ability to save for the next year?
Well, aside from not filing, a huge one is missing the saver's credit. If your income is below a certain level, the government will actually give you a tax credit just for contributing to your retirement account. It's like a reward for being responsible. But many people don't even know it exists.
Wow, that's a really interesting one to know. So one more before we go, just because I heard this one just yesterday. Is it better to pay a professional to do my taxes or use a free online software?
Wow, what a great question. If your situation is simple, for instance, one W-2 and you don't own property or a business, the free software is great. But if you have a side hustle, rental property, or complex investments, a local CPA is worth their weight in gold. They often find deductions that pay for their own fee. This has been an awful lot to process over a Tuesday morning. So let's keep the action item simple and helpful.
Great idea. So, actionable tip for this week is check your W-4.
If you got a massive refund this year, or if you were surprised by a balance due, taking a look at your withholdings can really make a difference for your monthly budget.
And you don't have to wait for next year to just fix it. If you have 10 minutes this week, log in to your employee portal or check with your HR department. The IRS has a, quote, tax withholding estimator, end quote, on their website that makes it really easy to see exactly what to put on that form so that your paycheck is really working better for you.
It's a small investment of time that puts you back in the driver's seat of your cash flow for the rest of the year.
Daniel, it feels so great to be back with you for season 2.
It really does, and we're really just getting started. Next week, we're moving from the tax office to the car lot.
Because we got money.
Absolutely. We're going to do a deep dive into auto loans, how to get pre-approved, and why the monthly payment isn't the only number you should be looking at.
Well, you really don't want to miss it. So please subscribe now so it's in your feed next Tuesday.
Thank you for an incredible start to season 2. Now, go out and make some sense of your cents.